Florian Grumes from Midas Touch Consulting told us gold will hit its 200-day moving average, and it has. What other nuggets of info does Florian have? Stick around and we'll find out on this week's episode of Metal Money. I'm your host, Patrick Vieira. Florian Grumes, welcome back to Metal Money. How are you doing?
Thanks, Patrick. I'm doing good. Thanks for having me.
Thanks for coming back. Glad to see you again. And we're going to start off with that 200 moving day average, which you nailed. As you forecasted in our last interview back in early October, gold prices have touched that 200-day moving average. Do you expect this key level to hold?
Yeah, I think generally it was supposed to hold. I mean, it's kind of like a little bit of a rubber band. So gold had been dropping like a stone since 9th of November. We got this bloodbath phase, basically. And it came down with quite some vengeance. And like a rubber band, the 200-day moving average couldn't hold it immediately, but basically gold dropped another $30 lower. 1765 in the spot market was the low. And now it has basically snapped back rather quickly within just 2-3 days, back to 1848, I think was the high so far on Thursday or Friday. So basically back to that former support zone, 1850. That's where gold bounced off, I think, 5 times in August and September and also in October. And then when it finally came down in November for the 6th time, the bulls couldn't defend it anymore. And that's where we got the sell-off. And I think it was a tricky 4 months correction now in the precious metal sector. I've been warning, I think a day after the top in August, that we will see probably a stop to this overall gold rush. And I thought we needed to have a correction. How it will play out exactly, nobody can forecast. I was just always having in mind that we have a seasonal pattern in gold established, that usually you get this low somewhere in November or December. It was also clear that the deliveries for the futures contracts, for the December contract, could play a role. And it was also clear that the US election could play a big role. And all this basically happened somehow. How it happens in detail, nobody can forecast. But after 3 months of basically sideways consolidation, on 9th of November, finally gold started really to sell off hard. And then we got this bloodbath phase in November. And the good thing, last Monday, it's a week ago already, when gold sold off to 1765, the miners didn't confirm that low anymore. So you had a little divergence. It also had to do because of the Thanksgiving holiday. Some of the mining stock markets were closed, and gold was trading in a very thin market, holiday market. So I think the chances are very good that we've seen the low of this 4 months correction. Usually gold needs a second leg to stand on 2 feet, right? So I wouldn't be surprised if we get another pullback towards 1800. That's where the 200-day moving average now resides. I don't think that the market will steeply run below this 200-day moving average anymore. Maybe another 1, 2, 3 weeks of confusion. We have a lot of macroeconomic and political events that could create quite some question marks and tensions over the next few weeks. But I think the worst is behind us. I think most of the gold mining stocks are oversold now on the bigger picture. So that means if you look at the weekly chart, the same is true for gold and for silver. And the only thing I missed, we didn't really get a massive panic low. So if you look at sentiment numbers, yes, the sentiment is far away from euphoria where we've been in summer, but I didn't see like massive fear and panic a week ago.
Okay, we'll touch on a few of those things in just a bit. Gold right now, do you see it as being oversold?
Yes, I think the weekly chart has turned around. So I personally like to keep things very simple. And my favorite go-to indicator is the stochastic oscillator, which basically shows you the momentum. And it has come down over the last 4 months from being very overbought now to being oversold. And if you zoom out and look on a weekly chart and maybe look at the last 2-3 years, you will see that this slow stochastic oscillator basically highlighted the last 2-3 great entry points for an investor over the last 2-3 years, because you didn't get a lot of entries. You get like maybe, I mean, this year we had one in the Corona crash in March, and now we have the second one. And the year before it was in December last year, exactly a year ago, basically. So these were the 3 times when gold was more or less oversold. Stochastic was turning around, signaling now we get a rally back up.
Yeah, some great points, because I think a lot of investors, they're still trying to uh make sense of it all. I mean, we saw gold dip below its 200-day moving average. We've seen it even hit its 50% Fibonacci retracement level. And we've seen it, as you said, just like a rubber band, snap back up to its 200-day moving average. So I think a lot of investors, they're trying to figure out which way do you go now. So again, if I could, you mentioned some price levels. So if I could just run through that again, what key price level would signal a reversal and that the correction may be or is over?
Well, first of all, I want to see gold move back above 1850. I think that's the most important and first step. If it does that, then I think we're in a good way, and it probably then will run towards 1900. It's just a round psychological number, which then probably will be taken out as well. And then we need to take out the November high at 1965. So those are the two other levels besides the 1850. And I think this could happen over the next, maybe 2-3 months. I think it's likely. It could happen quicker as well. We should not forget that we are in a cracker boom, and that central banks doing everything to push more liquidity out of nothing into the markets. So, but these are the 3 levels that I'm looking for now. And then obviously if gold takes out 1965, it would be the next psychological round number at 2000. And then we're talking already the all-time high at 2075.
Okay, so what are a couple things that may help push gold to break out above that resistance level that you just mentioned? I mean, perhaps will it be stimulus coming in next year? May it be the U.S. dollar continuing to weaken? In fact, do you see the dollar still continuing to weaken?
Yeah, I mean, it's been pretty weak over the last few days, surprisingly weak. But it seems the world wants to get more and more rid of the dollar. It's a process. I mean, we in the precious metal sector talking about that for many years already, and then it's still a long process. And still, I mean, I'm looking, as I'm based in the eurozone, so I'm also looking always the dollar against the euro, and it traded at 160 something in the financial crisis 12 years ago. Now it's trading at 121, coming from 1-to-1 more or less. So I don't care too much anymore about those fiat currencies, to be very honest. I know many people look at it, but I personally don't put too much weight on the dollar anymore if I want to figure out what gold is doing. I think gold is trading more and more independently from the dollar, not completely, obviously, but more and more people want to have gold. They need to have gold. And I think there will be other drivers, and especially now the technical drivers. Gold is in a bull market. Yeah. This, over the last 4 months, has been a pullback within a bull market. So I think it will come back up, and it will be a very interesting bullish next year. So I'm not too much looking at the dollar, to be very honest. I'm more interested in how gold is behaving against Bitcoin. That's more interesting than those fiat currencies, because they create any more. How can you measure it? I mean, there is, I think, 21% of all dollars running around now have been created this year. How can you measure? This is like completely distorted measurement, like it's not the same dollar like 10 years ago or 5 years ago. So I try to stay away as much as I can from all these fiat currencies.
Okay, you mentioned Bitcoin. Do you see any level where Bitcoin may come back down to where it may be a good entry point, some type of a retracement that may attract guys to jump in?
Um, I think the potential for Bitcoin is incredible. I mean, I'm pretty sure that we will see 100,000 at some point, maybe next year. I think just if you compare it with the last bull run, if it would do something similar, we would end up at $320,000 within the next 12 to 24 months. So that's more than 10x from where we are today. And you definitely want to be invested. You have to be careful. I always give the advice to make it very small in the beginning, put $50 to figure out how it works, and then step by step start learning about it and increase your position the more comfortable you get. But I see that huge money is waiting on the sidelines. I mean, it's been an unbelievable development over the last few months in the sector. Lots of big names were coming out, big companies starting to put their balance sheet into, or their liquidity into Bitcoin. And it's not going away anymore, you know. So, and a gold investor has to understand that Bitcoin somehow might be the Achilles heel that gold investors have. So I think gold will outperform most of the stocks, most of the real estate markets, most of everything over the next few years in this cracker boom. But if Bitcoin drastically outperforms your gold, you also want to have a position on the fastest horse.
Okay, got to ask you one silver question. I mean, silver usually falls and rises more than gold in percentage terms. However, while gold prices have crossed that 200 MA, silver is still about roughly $3 or so away from its 200 MA. Why do you think silver is seemingly more resilient this time around?
Yeah, you make a good point. So I mentioned before that the sentiment wasn't really a panic low. And as you just said, the fact that silver hasn't seen its 200-day moving average would be also a fact that makes me think maybe we are not done yet. But it's been trading very strong overall. I think we had this final washout in March and tremendous performance by silver over the year. And I think we just have to take it what it is. It didn't even come as low as in September silver this time, right? A week ago, it basically went down to 28.89, and the low in September was at 21.65, I think. So it made already a higher low, and it bounced off. So it looks pretty good, and I think it's silver is super bullish. It has a lot to catch up. It will outperform gold. It's very likely if gold manages to run back to 2000 next year and then break out above the all-time high, maybe it takes until the third or fourth quarter, but I think then silver would start to run, and at some point you're going to see $50. I think it's bullish. You want to buy this pullback. And I think Bitcoin and silver is the best combination for the cracker boom. It's your dream team, basically.
Okay, Bitcoin and silver. Florian Grumes from Midas Touch Consulting. We appreciate the time you've given us, and we hope to get you back on again soon.
Thank you very much, Patrick.
There you go. Florian Grumes from Midas Touch Consulting gives us short-term skinny for silver and gold. As always, let us know what you think in the comment section below, and remember to keep it liquid, keep it real. Thanks for watching, and I'll see you on the next episode of Metal Money.